Now that leads me to the second thing. Regardless of whether you have a separate LLC or you are doing your business as a solo practitioner, everybody should have a budget, and everybody should have still the 2 separate credit cards, separate bank accounts, so that you can pay for your business expenses out of your business bank account. If for some reason you're starting the year and you don't have any money in your bank account, or you're a new agent, you can always loan that business, enough money to get started. That way, that accounts for the money being deposited into the business, and that gives you the money to start paying for different things that you may have to pay for, business cards, website, whatever. But you want to put all of your expenses on it, to have it run through a separate account, because studies show that average realtor doesn't deduct up to 30% of the items they could deduct. All those little things that you purchase, business cards, when you're out with a client and you buy them coffee, when you buy postcards for marketing, all the little things, when you sign up for a class, all of those things add up over the year. And you might as well get the full benefit of them. And the best way to do it is to have a separate account and a separate ledger just for that. For those of you who want something very simple, because I believe in simple, I'm going to give you the name of this app that I just recommend for people who aren't looking for something that's complex. It's called Checkbook. It's an app on the iPhone. You can go there and set up an account where you just enter your expenses as you're going along, and it's just an easy way to keep track of it. There are many other ones, that you can use. That's just one. People always are asking me for one that doesn't cost any money and is cheap and easy. That's a cheap and easy one to do. It's right on your phone. So as you purchase something, you just put it in there, and then at the end of the year, print it, save it, email it to your accountant or whoever your tax preparer is.
Elaborate on loaning money to your business.
So there are a couple things. When you start up, if your company, the key there is, if your company is organized as an LLC, I'm not sure if you can do this as a solo practitioner, or not a solo practitioner, but as an unorganized entity. But if it's an LLC, you can loan the business the initial money. And by doing that, when you go to take the money out of the business, that money is now treated as repayment of the loan, not necessarily income. And so as an example, let's say you start your real estate business. You got, different things. You got to take the exam. You have to buy your, like I said, business cards, your signs, whatever. And let's say you spend $2,000. With that $2,000, if you just deposited it in your business bank account, that would be perceived of as a capital investment. If you loan it to your business, which is nothing more than just signing loan papers that you could download off the internet, a simple loan that's payable in whatever, 5 years, 10 years, then the first $2,000 you take out is tax-free, because it is just simply repayment of the loan. The only thing you would pay interest on is what little interest you charge yourself. So let's make it real. If I started a company, a new startup today, which I'm in the process of doing, nothing to do with real estate, I loan $100,000 to the business. If I just put it in there and invested it in there, then when I took the first 100,000 out, that first 100,000 would be taxable as income. But because I loaned it to the business, when I take the first 100 out, it's non-taxable. The only thing that's taxable is I charge myself whatever the going rate of interest is. So I put in 100,000, take out 100, and whatever interest rate is now, 107,000 for 7%. The 7,000 is taxable, but the 100 is not. That's just one of those little things that the IRS just doesn't tell you when you're doing it. So it all comes down to organizing your organizing your books, which is the biggest thing. Let's drop back. What are we talking about? Organizing your business. When the PPP funds came through during COVID, those people who had their books organized were able to get the funding from PPP. Those who did not were not.